Hey guys, this is Andrew for TRENDLINES.com. So very quickly, for those who are watching my video for the first time, this is YouTube, so I need to introduce myself. I'm a professional trader and I decided to make some YouTube videos to talk about technical analysis, which is reading the charts, but also reading the flows like the option market, the short interest to understand all the different mechanisms like the gamma squeeze or the short squeeze. And in this video, I want to make an update on the option market and all this short shares information on GameStop. Let's get into it. Alright guys, so like I did for MC, first I just show you quickly my chart. I'm bullish. I think we have a target of 800. Once again, I'm not saying this is the ceiling. I'm just saying that if we go there, we're gonna find some selling pressure. So all the technicals are telling me we are bullish, even if like I'm missing the volumes, but we are in a bullish development for quite a long time, and I'm expecting this price action to keep going higher. But what is interesting to look at is the option market. So let's have a look. All right, guys. So like I did for AMC, I just, I'm not going to explain everything here. What is important is to check the open interest. So here we have total 11 million equivalent shares. So you have it on every strike, every maturity. I'm just showing you guys that, I really did it. It's not like I just check some other videos or whatever and give you the same information. This is my information. You're not going to find it anywhere else. This is what I did. And, I just use some formulas to come up not only with the option open interest that is interesting, but not sufficient, guys. You need to use the delta, and go check my video, the video I did on AMC, where I explained this into details. Here, I'm just going to go quicker. But I think it's very interesting for you guys to get a quick reminder about what the delta means. The delta is the probability of finishing for call option in the money. So it's, for example, the probability to trade above, let's take the 800 strike, because this is the most interesting one. Look at the very big open interest, 2 million shares equivalent. So the probability of trading above 800 in, for example, May is 0%, but the probability of trading above the 800 level, we're going to check the July, October, and June. So what's the probability to finish at 800? So for June, you can see, so it's this one, it's 8%. So you have 8% chance to finish above the 800 level. And if you do the same for July, it is 18%. And if you do the same for September, it is 42%. So guys, there are not many places where you can find what the market is pricing, what is the probability about finishing above this level. And once again, to do that, I only compute the delta. So the volatility is here. So the formula is here, guys. You can do it yourself. You're going to find the same number as me. If you have troubles, just put it in the comment. I'm going to help you to understand what you need, guys, to do. You just apply this formula, which is here. S is the spot, K is the strike, sigma is the volatility, T is the maturity. T needs to be in years. And then you use the normal distance formula applied to D1, and N of D1 is the delta. So first information, 40% chance to finish above 800 in September. Breaking news. Then second information I want to show you guys is actually how this synthetic short, which is right now 6%, because all the delta is not equal to 1. So the maximum synthetic short for now is 21%. So this is the data you're going to see everywhere, but my data you cannot see everywhere because you need to compute the delta, and most of people don't even know what it is. So we are right now at 6% of synthetic short, right? All the other numbers that you see on this are unfortunately wrong, and we can go up to 21%. And what I want to show you guys is where it's coming from. And as you can see, it is mostly coming from the 800 strike, even when we are trading at 180, because the volatility is high. So these options have actually a lot of delta. You can see that 80 million USD, so this is in notional, is sitting at this level. So this is the green curve, is the position, is almost the biggest one. So you have more notional sitting at the 200 strike, but whatever. And look what happens if this goes higher. This is the gamma. We're going to converge, the delta is going to converge to 1 because the probability of finishing above a strike for a spot that is going higher is increasing. And this is converging to 21%. And if we go higher, of course, the 800 strike is the one that is going to get the most exposure. So I just showed you guys that right now we can go to 21-22% is the same as a maximum. For now we are at 6%. So if GameStop goes higher, market makers would have no other choice than buying shares in the market. And this is what is a gamma squeeze, when all the market makers are forced to buy shares because they have a short position against the retail investor, which exposure is increasing with the spot going higher. This is the delta. Now, my target is 800. I'm not saying is the maximum we're going to see on GameStop. I'm just telling you that this is a reasonable target that I think might happen. So I'm going to show you guys some cool option strategies that you can use, because once again, once you get all this information, what you need to do, what professionals do, is that you sell the high volatility strikes and you buy the lower volatility strikes, because this is how things are supposed to work. You are selling what everybody is buying, and then you are on the right side in expected gains, of course. But you won't be selling the 800 strike if you don't buy anything else. So let me just show you, for example, if you have, let's say, 100 shares, your P&L profile is like this. For example, if GameStop goes to 100, you can lose $7,000 US. All right. So just remember this, because this is something that is possible. And this is your loss if we go there. Now, how much money you can make if we go to 800? You can make $60,000 US. Let me show you another strategy, same as I did for AMC, that is actually making the same amount of money, but for a lower risk. You can buy a call spread. Like I said, you buy this strike, the 550. I calibrated those strikes to actually get something that is not too expensive. And you sell this one. So if you only buy the 550 strike call, it's going to cost you 1,000 US dollars. All right. And you can make, if we go to 800, 30,000 US dollars. So it's the same money as if you had 50 shares. All right. Let's imagine you have 50 shares. So you can make the same amount of money, roughly 30,000 US dollars. But 50 shares, it can cost you, if we go to 100, 3,000 US dollars. And if we go below, even more. Here, if you sell your shares and you buy call options, you can buy only one option, which is as a multiplier, it can make 100 shares. You make the same money at the 30,000 level. Of course, you make nothing if we go to 550. So this is the problem of this strategy. But you have a very limited risk on the downside. And the smart strategy that professionals are doing, I mean, the clients that I have, like to do this kind of strategies, it's because it's lowering your price. You're selling the 800 strike call because it is the one that is the most expensive. And in terms of volatility, of course, the price is half the price of the 550 strike. So now you only spend 500 US dollars and you have the same money on the 800 strike. So you spend 450 and you can make 25,000 US dollars. And if you are fine with spending actually a bit more, because you're going to tell me, but I don't care about selling the 800 strike, I'm okay to lose 1,000. So you're going to tell me I prefer to have this, so I make more money if we go above 800. But then I'm going to tell you, look, what is even smarter is to sell this one. So now it costs only 500 US dollars, 450. And if you're fine with spending double, you just double it, all right? And so you spend the same 900 US dollars. So this is the money you can lose. Added the premium. So now you can lose 900 US dollars. But if we go to the 800 strike, you can make 50,000 US dollars, guys, all right? So you can choose whatever you want. But I'm telling you that this kind of strategies is the strategies that professionals would do. All right, selling the very expensive strikes that everybody is buying and buying those that are before, where the volatility is lower. And once again, you can tell me that you prefer to keep your shares, which I can understand, but you just, it's interesting, I think, to see that you have other strategies that can make much more money on the upside and that, have a very limited downside risk. If you think a short squeeze is to happen, and we can see that, this short squeeze happened, for example, in January, and right now the DTC is 1 to 2, depending if you use the weekly volume or if you use the monthly volume. All right, so it can happen again. All right, we can see that the short interest is not increasing for now, it's increasing on AMC. But if you believe that this squeeze will eventually happen, but for now, as you can see, guys, we are in the green area for all the parameters I'm checking, so the squeeze is to me not coming very soon, but still GameStop can go higher. And like I said, we can have a gamma squeeze. So I'm going to keep an eye on all this data that is here, because this number is very huge. And like I said, the 800 strike is very animated. You have a lot of open interest there. So if you believe this can happen, guys, you know, I just gave you a strategy that has a very low risk for an insane profit on the upside. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.